there is so much bad shit going on. Like there are so many
Why you got to
people.
start off on the
Run.
negative? We just brought Dan
I'm
on. You know,
not. I'm
he's
not. This episode of the Under the Table podcast is brought to you by Shrubs.me, your all-in-one digital hub. Share files, links, videos, and more from one beautiful customizable page. Get your free account with 2.5 gigabytes of cloud storage today at Shrubs.me.
Are you cold at home? Like you got a sweatshirt on. Is it cold at home?
It's so cold because, the air conditioning has to be set at 68 degrees so that when we sleep, it is
There's
comfortable
programmable
upstairs.
thermostats, like you got
For what? Like, trust me, you cannot,
programmable thermostats.
you can't, it doesn't catch up. Like once this place loses the cold, it
Yeah.
takes some time to catch
You're like an
back
ice
up
box
again.
over there. Yeah.
Well, my office especially is extraordinarily freezing. So
Yeah.
I generally have a heater beside me, but no, I mean, I don't like let a branding opportunity go to waste, TK.
I can
mean,
tell
this is how I go out all the time.
by all the merch that we're wearing. You know what I
Yeah,
mean?
I go out
Yeah.
and I even went out like on the town. I was in Yorkville the other night. My wife looked good, and I was in like a real hot spot, and I had my hat on, and
Yep.
you know,
People were noticing. People were like,
well,
hey, what's that, man?
actually,
Shrubs.
I went for dinner first. No, I didn't wear the Shrubs hat. I wore the Deal Core
Oh,
hat because I
okay.
don't know. Certain priorities. I went out for dinner with some guys that helped me out with the debt, and they took me for a lovely dinner. And then I went to meet my wife after in Yorkville. And well,
Sure.
let's just say I didn't look like the rest of them. Nobody
Who
else
did?
was wearing baseball hats that had their company name on it. That's for
That's
damn
okay.
sure. But hey,
How many guys took you out? Just the two, or they had other guys with them?
no, it's just the two. We had a
Yeah.
nice time. Yeah, very nice. Had a good time. Had a nice
Yep.
steak. I don't know if it was the best place to take a guy like me, to be honest with you, TK, because I'm a little
Oh.
particular, but
Oh.
it was a nice place. Not the listen, if I was younger, I'd be like, wow, this is a really hip, cool part of town. But I'm
Yeah.
not younger. I'm like,
We
there's no
know.
fucking parking. Where am I supposed to park this goddamn thing? I hope nobody
Yeah.
fucks up my car. It's about to rain. My back hurts. I don't want to walk. Where's the fucking valet? For fuck's sakes. This is the stuff going through my mind. Why did they invite me here? But
Yeah.
then when you get in the place,
You're like,
lovely, lovely, lovely
people
food,
people know what they're doing here.
interesting food, good steak. But the area's like not my bag, and
Yeah. It's been overrun now when you go to like Yorkville and stuff like that. Like it's no longer
it's
the
not Yorkville.
classy people. It's
No.
not? Okay.
It's well, no, we didn't go to Yorkville. I ended up in
Oh,
Yorkville, but yeah,
yeah.
Yorkville is not the place that it once was.
No,
It's
it's
more
not
like the
classy
place that it
anymore. It's
once
like
was. Like it,
it
it it's gone back in time.
exactly, yeah. It's like foreign exchange students.
Well, I
It's
mean,
like,
there's a lot of I mean, I know a few people that live in there that they're definitely not foreign exchange
sure.
students,
I'm not
TK.
saying that there's not those people still there,
But there's
but
600 square foot units with foreign exchange
there's a bunch
students
of people
in
who just want to
Yorkville
live
now.
there because they say they live in Yorkville, and now it's no longer as prestigious.
Well, the
So, anyways, I
product,
mean,
yeah,
let's talk about some real estate stuff before our guest comes on the show.
sounded like we
Um,
were, but yeah, okay, that's a good idea.
there's
Sorry for interrupting the podcast, but actually about 50% of you watching this podcast right now are not subscribed to the channel. So if you could just take a few seconds to do that, it helps us out a ton. And we thank you for your support. Now back to the guys.
there's a
Great
lot of
guest.
stuff. Yeah, I know. Big guest
Great
today.
guest. Great
Yeah,
guest.
rents are going down.
Rents are going
Rents are
down.
going
I
down.
know.
People are having a hard time renting places out. No, nothing's moving in the multifamily market.
No.
Okay.
I was in a room with a bunch of guys this morning where I swear I sent the guy a text. I said, that guy looked like he's going to off himself.
So
Like it is not
I
good
was
in
at a
this
guy's
space.
house this week, which is why I was calling you to tell you about a big developer. They have lots of projects.
When did you
Okay.
call me?
So don't worry about it. I forgive you for not returning my call,
I
Mr.
apologize.
Frankfort, because you're
I'm
just so
sorry.
busy.
Well,
Very large developer compared to the average developer. Not one of the big guys, but you will tell me more about his connections later on.
okay.
Anyways, long story short is everything's being converted to purpose-built rental,
Trying to be.
trying to be converted to purpose-built rental.
Trying.
And so you've got a huge amount of properties that will be converted to purpose-built rental, which means we're going to have a lot of rental only. Because when you have a condo building, first it's investors, but there's a bunch of people who could be end users eventually moving in.
They're not gonna. That's not gonna happen.
When okay, what are you saying? That
I don't think that
what's
they're
my
gonna.
point?
Well, they're
My
not gonna
point.
figure out how to make them into rentals.
Well, bottom line is any new stock that will be coming on will only be rentals. That's my point.
Mhm. Got it.
Which
This is
means
true.
that there's going to be a lot of downward pressure on rental prices. There has to be.
Has to be. There's already too many
Immigration was definitely a
somehow.
big part of keeping rents up. And now that we're going to have more and more rental properties coming on the market, the small time guys like myself, we were always saying things like, the stupid landlord tenant board, because of the rules, we're selling our duplexes and they're going to be converted to single family. The province is taking rentals off the market, but really they're not, because there's only so many mom and pop landlords who are going to sell. And the majority of the stock that's coming on is going to be institutional eventually. It might be some developers and people who own it here and there, but at the end of the day, it's going to be the big guys coming in. There's not going to be any rent control. So, over time, they'll be able to, follow the market. And, you're going to have a lot of inventory coming on. So how do you get CMHC financing? So right now they're saying to you, $4 a foot, great. Your performance looks great. We're going to give you the financing, but boom, the actual building's built and you're getting $250 a foot.
Oh no, that's not a
What
good
do you do?
scenario.
But so what's the
What do you
backup
do? You
plan?
sell the building really quickly, and you take a big hit
But
and you
CMHC
run.
must have that in their forecast to say, if you can only hit this rent target, you have to put in more equity.
That's the only other option, or you have to sell it
Yeah.
and take a hit. Like those are the options.
Yeah.
And if that's the case, good luck bringing in all that extra equity, because that
Yeah.
sounds like a great place to put equity, right?
But do you know what I'm saying?
Yeah,
You're
it's a
telling me
big
that
fuck
situation
up.
won't happen if the market continues to go down on the rental side?
No, I'm telling you that well, I guess if it goes down to those crazy levels where
But
it does make
even
sense.
$1 a square foot over 100,000 square feet a month,
I don't
you're
know.
talking about $1 million off
These
your NOI.
guys are all saying like the high rise just don't convert to rental. So I don't know, like as rents are
So
going
this
down, it's
one
not going to get better. Like,
but
right?
this one project, the guy said he's already got approved for CMHC MLI Select. So he's
Yeah,
already
but
converted one.
there's guys that have been approved for the MLI Select, and then the MLI
Yeah.
Select changes right from underneath them, and all of a sudden it's like it's not a thing. You know what? We should bring Dan on now because he's the MLI Select and the rental property
I'm
king.
texting you the guy's name, so we won't let the editor put this in the show. But I'm sorry, I'm not texting you. I zoomed messaged you.
Oh yeah. Oh
Yeah.
that's generational kind of stuff going on. Are we supposed to edit this out
Yeah.
now?
No.
No, we didn't say anything. But that's a second or third generation of a couple of families, if I
Yes,
know
exactly.
properly.
Yeah.
If that's the guys I think they are. Yeah, that's well, I don't know what you're telling me other than kind of who it is, but
I just want you to know that it's happening, is what I'm saying.
What's happening? That
they're converting it to purpose-built rentals, because you're saying they're not.
These are the kind of guys that might be able to convince the world that they've figured it out and have money that will not
That's the guy I met.
turn on them. Yeah. He's working with some of our buddies that we
say
know.
no more.
Yeah.
Let's bring on our guest.
We should bring him on. Let's go. So that wasn't cryptic at all, and that must have been really interesting to hear. Shrubs.me, your all-in-one digital hub. Share files, links, videos, and more from one beautiful customizable page. Get your free account with 2.5 gigabytes of cloud storage today at shrubs.me. Listen, I'll tell you, I'm not kidding. There is so much bad shit going on. Like there are so many people.
Why you got to start off on the negative? We just brought Dan on.
I'm not.
We're supposed to be the positive ones.
It was the
You're
perfect
stealing my lines.
Dan, where have you been? It's been when was the last time we had a show where you were on as a guest? This is like
a while.
It's a long time.
Yeah,
you got too big too fast.
Well, Darryl was out there getting canceled and stuff, so people were telling me
you don't attack.
Stay away.
Yeah,
Dan got nervous until
How many times do you think I've heard that?
Then I got canceled. So
everybody got canceled.
Yeah. Once you get canceled, it's like these people don't know what they're talking about.
You know who emailed me the other day? You know who emailed me like 2 days ago? What's her name? What was her name? She got in a lot of trouble in your Twitter thing.
Oh, isn't she coming on the show?
No,
Haven't you guys had her on a guest on the
we've
show?
had her a few times
Oh,
actually, but
Justice Queen.
Justice Queen, or what does she
Yeah.
call herself on here? Yeah, she emailed me the other day.
No way.
Yeah, yeah, it's crazy.
How's
She's
she
like,
doing? She doing okay?
yeah, I think she's on there just kind of hiding,
Yeah.
just to keep things going and to stay
It's
in
a shame
touch.
that stuff, that kind of stuff has to happen, eh? Like,
So crazy. Well, listen, I mean, you know better than anybody how hard it takes to get any kind of traction on these things and how hard it is to build an account. Getting canceled is a nice punch in the penis, I got to tell you, right?
well, yes and no. I mean, I
Maybe a
think,
Blessing.
blessing.
yeah. I think it just shows you like, yeah, the risks associated with the whole game, but also, I feel like if, it's a little different in Canada, but in the US, it's like you go as far as you can before alienating one side, and then one side like chooses you, and then the other side defends you, and it kind of catapults you into like this new. It's like just a
Mhm.
fork in the road, but then you just end up becoming like this like radicalized like savior for whichever side selected you, right? And
Right, right.
the opposite of the one that canceled you. Um, I feel like that's kind of just how it works, right?
It's
You
so
can't keep
polarizing.
everybody happy. So it's
Yeah.
either
It's impossible. Yeah.
yeah. So but canceling, it depends on who's got the power, right?
Yeah, which I
Who's
don't
got
like.
the
I think
loudest
most people
voice.
are just done with that stuff, right? Like most people look at it and they're like, "Yeah, who cares?" Like like I don't really think people listen to like like a non accounts typing in all caps like screaming at people who sound like deranged on social media either, right?
Yeah,
So
yeah.
there's that.
No, I guarantee you that from the outside, nobody is paying attention to those
Right.
people. As somebody
Right.
from the outside, I can tell you with
Yeah.
certainty
Yeah. Yeah.
that
So
nobody
right. And
nobody
and
cares.
it's literally like you've hidden your identity, like you've taken away the credibility that you have, right?
Yeah.
Like you can't
Zero.
wear. Yeah.
But they
Yeah.
make up most of the audience, right?
Yeah, on I would say on like Twitter, TikTok's like huge for it too. Like TikTok is savage, man. Like it's teenagers with an anonymity.
Yeah.
And it's like,
Yeah.
they're dumb. They got like dumb stuff to say, weird opinions on stuff. Like,
We
Yeah.
don't even understand half
Self-esteem
the shit they're
ultimately low.
saying.
haven't
Yeah.
even been indoctrinated by post-secondary education yet. It's
Yeah.
like,
Right.
Yeah.
come on. Like they're just, oh yeah. So, but
It's
it's
funny.
a fascinating thing, right? You take away people's identity, you give them anonymity, and they just become monsters. Fascinating.
Monsters. It's a
Social
cesspool.
experiment. Yeah.
Yeah. I only go on there now for news. I check like your feed out. I check Soretsky, Butler. That's basically it. Then I got a decent idea, at least, of what's in the news. And
Hmm.
then the rest of it's just all commentary and
Yeah.
bullshit from bullshit artists and people whose opinions I don't really give a shit about.
Ron's killing it though. I mean, he's
Ron
like
is
just
killing it, man.
crushing it on YouTube, eh? Like,
He's
Everywhere.
because
putting
he
out
hired this
content.
new social media
Yeah.
manager,
Yeah.
and she's just like,
Crushing
yeah. I
it.
mean, they're
Yell on screen, yell into the
he's
camera.
got the
Say
personality, he has the
yeah, of
knowledge. Like, he just
Ugh,
sits down, no script, no, you know what I mean, and
course.
just rips it because he's been in the business for 40 years, right? So
yeah.
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 he can just
Yeah.
talk, he can deliver more value right out of his mouth than most people could with a scripted video.
Yeah.
Yeah.
You
Yeah.
just got to be
Content,
able
that's
to
it.
listen to the voice for a while or tune him out.
Yeah,
He's like Bob Dylan or Neil Young, like if you can
yeah,
get past the voice, there's genius there.
yeah,
Well,
yeah.
Yeah.
well,
You guys stay out of that one.
Uncle Ron, he's a good mortgage broker. Let's leave it
He's
at that. Okay,
great.
so everybody's
it's
got their
What the
opinions on
fuck?
things where the
I,
market's going.
I,
He's the
I, well,
best.
I find his voice entertaining, but it's funny because like when we were reading his podcast reviews once, and when I went in, because I'm actually going to be in his studio next week, and I was like, dude, you got to fix your audio. Like, look at every single comment is like, man, you break my ears every episode because 1 minute it's like quiet and then you're screaming into the mic. So I
Right.
think they figured that out. So, but that was definitely a headwind for a bit, for sure.
But he's got a great thing going all over the place. Yeah. Whoever's doing his social media is
Sophie's her name. Yeah,
is
she's great.
Sophie.
And what
as
what we
good as it
found, which
gets.
is the same thing, is like being on multiple platforms and having those short clips
Mhm.
is our biggest views. Like,
What do you guys
like
use, like Opus Clip to push that out? Like
No, we use
AI?
Aiden clips. Aiden
Yeah.
clips. No, my
So
son is the
just
editor.
the editor who's
Yeah.
his son just does
Oh,
everything
he's using
manually
Opus
and
Clip. He's just telling you he's doing
No,
it. He's got an
no,
AI doing it. He's
no. He uses what's it called?
Adobe,
OBS or Adobe Premiere Pro
yeah,
or something
nice.
like that. You know, he's down in his room all day editing. He just
Wild.
another big podcast
It's
just
laborious.
hired him. Yeah, it's pretty crazy.
He's getting
Straight at
contracts
it.
from us that we hopefully will get a piece of.
Yeah, that's right.
But that's been the biggest success.
You
right? I
making
think that's
commission? You brokering talent deals now as well as real estate?
No, I didn't realize
absolutely,
we were.
yeah.
TK
I'm not
just
getting paid
jumped
for it
on.
yet.
Yeah,
Making
TK
some
just
commish.
You know, half of them work out, half of them don't. You know, so
For sure.
that's the way it goes.
This is where it's at, though. I mean, you've certainly realized it ahead of most people. This is God. I mean, if I could get away without the real estate part and just do the content all day and make good money, this is where it's at, man. No?
Just a classic dude, just like wants to talk all day and just hopes everyone.
I don't know about all
I don't know,
day,
everyone
but
should
like,
just listen to my voice all day.
why not? Why
He's
the
tried
hell
that
not?
though. No, he's tried that. It's the best source is when he's got multiple. He needs to be talking with somebody.
I
That's
need
been
to be
your
talking at
just
somebody
just talking
who's
on your
ignoring
own
me and
hasn't
cutting
had
me
the
off
same
all day.
hasn't had the same level of things. Doesn't have to be me. Just has to be like another human being in the room or nearby that he's talking to. Then he's
Yeah.
got success.
On my own, I'm pretty dull. That's the truth.
Let's
But
leave it at that.
regardless, thank you.
Speaking of doll, Dan, what's going on in the real estate market?
Oh,
All right, tell me.
whoa.
Give me the
Nothing
update
good.
from your perspective.
Yeah, nothing good. I mean, prices are grinding down. Volume is still very low. I think July will probably end up being stronger than every other month this year. Not relative to those months, but relative to like last year. Like I think we'll probably see a stronger July than we did last year, which is I think people are gonna feel hopeful about that, and that's good for them.
Why do you think that is? Just on that note,
Is that
I
good
noticed the same
month
thing.
over month too? Is that better month over month as well?
No, it'd be pretty rare to see a July that's stronger than a June. Like July and August are toast, right? Usually
June
everybody's
this
out of
year
summer.
compared to June last year is not
Well,
as
so-
good as July this year compared to July
Yeah.
last year. That's what he's saying.
No,
So
I
why do you
get
think
it.
that is?
Well, I think it's a big piece of it is low base. Like July of last year, people were just exhausted with real estate, economic news, et cetera, and just summer off, whatever. But I think honestly, like, and I think we did get a lot of demand that got sucked out of the spring market this year as a result of trade war, election. Like there were so many things that it was like, why would I make a decision why would I make $1 million purchase decision in March or April or May? I guess April was that when the election was done, but even May when the trade war was still going on. And now kind of, I think people are just fatigued with that whole thing. Like I don't even know if people want a result. They just kind of accept that there's no result. But before they were postponing decisions, hoping that there would be a result. And now they kind of are assuming, okay, they've sort of just capitulated. Yeah,
I know
probably
a lot of people that
That's
want
that's
a
my
result,
number one
man.
theory.
Yeah,
Exactly that. What you're
A
saying.
lot of
Yeah.
people need that result though. Like most business owners that have
100% and
yeah.
and pandemic related jobs, like Bank of Canada's monetary policy report yesterday showed that like we're seeing huge not layoffs, sorry, but job weakness, wage growth weakness in pandemic sensitive industries, right? So like people aren't going to buy a house if they're fearful that they're going to lose a job, right? Or maybe some people would, but like most people don't think that's a good idea, right?
Yeah.
So
they haven't lost a job yet, but they've got
Yeah.
less security.
Yeah.
And so then that
Yeah.
decision's not something that they're really to take on that risk.
well, so we
I
had
mean that seems reasonable, right? Like we're
Yeah,
not
sure.
jacked up on cheap credit and FOMO anymore, so it's like
Yeah.
we actually got to tiptoe around this market and make smart decisions because this is just the flip of like this is a bear market, right? This is everyone feels bearish, like nobody is positive about real estate, so they're not like, oh, whatever, screw it. If I lose my job, like I'll just sell the house to some other guy for 30% more. People are like, oh, everyone I know got burned. Think about it in like 2021. People were piling into pre-cons at record high prices because everyone they knew had made money on a pre-con. Now, nobody's piling into pre-cons at any price because everyone they know has lost money on a pre-con, right?
Yeah.
That's it. Yeah.
That's how bearishness happens.
You'd be an idiot to jump into pre-con right now. Like you'd have to be living
Yeah.
under a rock for the last 2 years.
yeah. You'd have to
Right?
be crazy.
What else are you seeing? What are you seeing as far as commercial stuff, land, multifamily, anything?
I think like CMHC's propped up the multifamily space. That's kind of moving. Industrial, slow, steady, whatever. I don't know. A couple guys I've spoken with kind of in like the bigger, I have a couple of clients that are pretty big in the industrial space that, they've said like, yeah, this seems like there could be some risk of overbuilding, right? But it's whatever. Retail's actually on fire, to be honest. It was like the one asset class that nobody was really playing around with, and it kind of has
Really?
been
Where?
well, like if you're developing it, right? Like you imagine like since the beginning of the pandemic, nobody was really developing retail, right? Like people were like, retail apocalypse, even before the pandemic. It was like retail apocalypse, Amazon, blah blah blah. And then so we had zero, let's say close to 0% new retail, and
Hmm.
we have 10% more consumers of retail.
Yep.
So retail is doing okay in that
Not
regard.
not in malls, but it would be like outside
Yeah,
plazas, shopping
suburban.
centers, things
Yeah,
like that.
Hmm.
Yeah, I was
yeah,
talking to someone who works in Metro,
yeah.
and that they're still developing because they'll buy the land, they'll develop it, stick their Metro in there, and maybe do like a lease back or something like that, sale lease back
Mhm.
afterwards, or keep it for
Yeah,
their own portfolio. And they're still pretty active.
yeah,
So
yeah.
there's communities that have grown a lot that need
Yeah,
retail now.
yeah. And then the multifamily side, like I think like caps are still super low. CMHC's like, you know, basically,
On the appraisals or purchase or sales.
yeah, purchase and like yield on cost on development side as well. Like people are still willing to develop at like a 4.5 yield on cost or whatever, 5% yield on cost because you can hit a 1.1 or 1.2 debt service coverage ratio on that 55-year amortization CMHC loan, right? Like basically the government has made it possible that you can take a bad investment and make it into a good investment by spreading out the AM so long that it cash flows, right?
Okay.
Um, and so that's where we're at. Like, and everyone's piling into multifamily. You're getting
You have to do
interesting.
stupid shit though to get that 50 years. Like it's not
Yeah, it's
it
true.
was really good about 8 months ago,
Yeah.
maybe 10 months ago, right? But now you have to do the accessibility and the affordability to get the 50-year
Yeah. Cause
amortization. It doesn't really make sense to go for 50 years for a lot of projects
Well,
now.
some guys are making
yeah,
sense of it, even with that.
depends where, right? Like Alberta,
Yeah.
you see a lot of it because the income cutoff's way higher. So like your affordable rents are market rents. So you would build a project anyway. You're always going to get affordable in Alberta. Their energy efficiency isn't that hard to achieve to get your 50 points there. And then a lot of people will do whatever 30 to 40 points from affordable and then 10 from accessible, I guess,
Hmm.
and get to like, but I think that, and it's funny to see, like you talk about kind of pre-con, the whole Toronto pre-con community, not the whole, but like a lot of the people who are still trying to keep that machine moving, they're all piling into like Edmonton CMHC deals now, right? You've
So
seen
they take
this?
their investors and
Yeah.
bringing them to resale
Still?
multifamily.
Oh,
Still?
you guys haven't seen? Oh yeah, still, yeah, yeah.
Really?
Oh
What
yeah,
the hell?
yeah. So I don't know. I mean, they just figured out, they build a new casino, right? The one in Toronto burns down, you go build one in Edmonton.
When is Saskatchewan gonna hit already? Like
Oh,
is it happening?
it's, well, it won't work for the CMHC product because the affordability cutoff. Like that's where you're saying like, in I know you're referring to Toronto projects, but like, you have to do a lot of crazy stuff to hit these um the points to get the extended amortization. Same thing with Saskatchewan. Like if you go look at the way that CMHC underwrites on affordability, Alberta really like makes sense. Some markets in Ontario make sense. Like Ottawa is good because Ottawa has a really high income relative to rent, right? Kitchener Waterloo, some projects get affordability. Um, but Alberta like it's always a slam dunk. You can get typically the majority of your points from affordability. But this has evolved into another interesting
Even
kind of
though
thing
that's
that's
market
happening.
rent, right? You're not
Yeah,
taking a hit on market rent as much in
exactly.
Alberta.
Yeah.
Yeah.
Yeah, exactly. Maybe a little bit now that rents have climbed so much, but yeah, it's like I think it's like 1,400 or something there, which is like a basement apartment rent. So what a lot of guys will do is they'll build like in Calgary as an example, you can build they call it a fourplex with suites. So it's like a row of townhouses, like 4 units, and then they put basement apartments in them. So that's like
Mhm.
your suites, and the basement apartments are all so you have 50% of your project is affordable, and then you're hitting your
Which are just market rents for basement apartments.
yeah, basically, yeah. Like it's not like
Yeah.
you would get more if you didn't have to do that commitment. Maybe you're capping your upside because it's a 10-year commitment, but it's whatever. But this has evolved into another like interesting problem from my perspective. Like this is sort of the risk that I've been observing is that I think there's a solid chance we're overbuilding rental right now, to be honest with you, in like a
100%.
This
We
is
lot
were
of
what
just
I
different
talking
keep
about that
markets.
before you got
seeing.
on here,
Yeah,
and
what
Daryl
the
doesn't
hell?
believe me.
No, I didn't say that. I said that the developers that bought condo projects for high rise are
Yeah.
having a very tough time figuring out how to convert to rental, and most of them
The numbers don't work.
cannot figure it
But
out
I gave you
at
an
all.
example of somebody, and you agree if they got
No,
it
I said
that
if you
they're
can buy it for 250, if rents come down to a point where things are so fucked and that guy has to sell it for pennies on the dollar, then it might work. That guy,
If you
I don't know. Maybe he can. I said maybe he has patient enough money to
Mhm.
pretend that it works, and that maybe he's a good enough
No, he told me
developer
he told me he
to
bought well.
convince
So it means
people.
no, he bought well. So if you bought pre-pandemic the land at 20, 30, 40 bucks a buildable, then and then you were planning to do, right?
No, doesn't work. Doesn't work. You could have
Even
it for
What?
free.
I would
Doesn't
agree.
work.
Yeah, like I think yeah, even if you get the land for free, like because a remainder of the cost structure is so expensive. If you're talking like Toronto and it's high rise, like as soon as you get into concrete construction, you're not like a pro forma just will very rarely work. It works with some mid rise stuff, like if you're talking 100, 150 units. I've seen a couple of big Toronto developers getting projects that they can hit the DSCRs on CMHC for stuff like of that size. But if you're going high rise, like what's your total creation costs? Even if land is zero, right? Like if you bought it really well and 20 bucks a buildable, whatever, that's really only what 8% of your total cost structure, 10% of your total cost structure. So you
Mhm.
can reduce that maybe by 5, 8%. So you're going from what $1,200 a buildable square foot total creation costs to 100 or 1,100.
Yeah.
Mhm.
You're still not going to hit a DSCR at rents that are what 380 a foot, 420 a foot.
No, and now they're dropping. And so what's happening now, also on top of everything, is that the guys that they penciled, like, I don't know. I was talking to people this morning. I remember a time when every pro forma for a rental building was $5 a foot. Didn't matter if it was in Newmarket
Yeah.
or Grimsby or
Yeah.
North York, everybody had a five on that thing, right? And so now what's happening is even if you qualified for CMHC, and this is what TK was saying before, is like, the plan was 450 a foot and everybody was on board, and now I mean TK said 250, but like it could be
Whatever. Even
375 or
even
4,
yeah,
even
even a buck lower
425
a
is
foot
fucked
still screws up your whole
because
deal.
they were so tight already, right? And so now you got guys trying to convert something that was probably kind of tight as a condo, right? Convert it into a rental that's like super tight and convince people while rents are going down in most product, right? Considerably right now. It's a horrible recipe to put things together like that.
Yeah, I totally agree. And
Yeah.
Toronto, and like I would say that Toronto is probably the most insulated against it. Like if you look at that's the craziest part. If you look at purpose-built rental under construction as a percentage of total, Ben Rabideau put this chart out recently. But basically, BC, like 14% of their entire rental universe is under construction right now. Okay, so
Right.
if if population growth doesn't grow, and if new household formation doesn't grow, and maybe those will both grow a little bit, but if those are both zero, then your vacancy rate is going up by 14% or going up
That's
to
crazy.
14%. Isn't
Yeah.
that nuts?
Yeah.
Crazy.
Alberta's not far behind that. It's like 12%.
What's our percentage?
Ontario's
Ontario.
like just over 5. But Ontario does have the like you kind of have to caveat that because
We
we
have a
also
huge
have
stock
50
already.
and we have 50,000 condos closing this year or like in
Yeah.
the 365 days wrapped around today
This
when
is
I'm
the
speaking.
big problem. That mixed with the amount of rental buildings
Yeah.
that are planned to come. Okay. I don't think what we're currently building is so much that we're overbuilding. It's the combination of what is coming down the pipe, because I mean, it's not even that many, but the combination of that plus 20 to 50,000 units that were supposed to get flipped on paper or become rental units, all that at the same time, that
Mhm.
is a little bit scary, especially for the purpose built rental guys building new now, right? Because uh, they're watching their performa disintegrate right now, right? Now, the saving grace for a lot of guys is that costs are coming down right now.
Yeah.
And like nobody's planning to build anything. So if you are, you could catch this like nice little gully, right? Where maybe rents are still good enough and the construction costs like you drop dramatically and it opens up a vista for you to have some profitability again. But it's really guys that are converting these sites from the high rise to maybe a rental. They've already been going through the goddamn thing for years. They've got
Mhm.
interest payments that have been piling up for years. They just wasted all this money. And now you, because you can't just say, okay, this condo's now a rental. Like it doesn't work
Right.
that way. You have to reconfigure everything. You have to redo
Yeah.
the mechanical, the plot, like everything, right? And now, like Now you have to add to it that like rents even aren't even stable. Like, how do you do this? What's the next move now that you say, okay, I figured it out, it's a rental. Now what? Because you got a bunch
Well,
of condo guy money behind you, right? Sitting there
mhm.
going, I should have been paid out already, right? So who's funding this thing? Everybody wants their money back, right? Well, how does the next move, even if you could figure it out, unless like you're talking TK, it's that guy, and he could just say, hey, I need another $8 billion from everybody around me. Who can figure this shit out?
Those are the guys who will be successful in the market. I think that's the answer to the question. Like the hallmark of a recession is that you see like massive M&A activity, and we're seeing that in the real estate space right now. Like all of these garbage sites well, actually great sites that were bought up by garbage developers who, went from building 3 custom homes to doing a high-rise project and had no business taking on all that risk and burned through their interest reserve and are stuck in a project and maybe even have some pre-sales or at least a good enough site that it could be flipped. They're approaching the big developers and the 5 or 10 developers at the top who have staying power and can put in the 20 or 30% equity that's going to take to get that project actually done as a rental
Yeah. Or
are
just sit on it.
They got their
well,
choices right now,
but they got amazing choices right now.
right?
And that's
Yeah.
where you're
They
seeing
know that.
I
yeah,
met a couple of them on Saturday night. I was hanging out with a couple of guys, big fucking players, like big players, land guys, like subdivision guys from way back in the day. And they were like, we're buying shit right now. I'm closing on land. I don't care when I'm gonna build on it. There are fucking deals out there. Right.
yeah.
And they were like of the opinion that it just takes one guy right now to buy a site that everybody sees to reverse the course because it's all perception, it's all sentiment. And
Yeah.
right now, Mark Morris was even saying to me a few weeks ago, which we've talked about, it's like the mainstream narrative is caught up to what all of the real experts have been seeing and feeling and living and breathing in the trenches for months.
Yeah.
It opens up, people are looking for deals now, right?
It's creating fear in the market. Yeah.
But
And
it's
now the offers are
creating
coming lower. The sales numbers are going down. And
the
it's,
guys that can are like, oh,
yeah.
maybe I should really look seriously now, right? Because guys are hurting. And it's like, it's been a long time. Like,
I
look
still don't
back.
think we're at the bottom of the cycle. I still see
No,
so much
not even
bad
close.
debt. I
Yeah.
still see so many, like you have no idea how many. I could be at a new appointment to meet a new seller every day. I have to say no because I have too much on my plate. That's how
Yeah.
many people are calling saying, I need to sell. I want to sell. Can you come and see me? I just got off the market. I just expired. I'm firing my agent. I'm ready to list. It's just like, think about how many more people
Yeah.
still are going to need to go on the market over the next 12 months.
I think
A
the
lot.
easy metric to look at for that is just how much leverage do we have? Like if you just look at Canadian household debt to disposable income, we can't recover if that number is over 100, right? Like
Yeah.
because we cannot take on more debt. And you could see the bounce coming out of COVID. Like you can see how much we dropped. We dropped to like, I don't know, like 112 or something. And we could grow out of that. Our economy was ripping, but rates were at 0.25, right? Or overnight rate was at 0.25. So apply that to the new credit, the fact that we're in a new credit cycle with rates and the mortgage rates, let's say in the 3 to 4, 3 to 5 range for the foreseeable future. Where do we actually need to get to be able to grow as an economy? That's to me is
Stimulate
the
it
only.
first. You
Well,
gotta
If you-
stimulate it
but
first
you
before it grows.
but you can't like the way that like we're so trapped because we have so much leverage and we're in a debt-based economy that historically like when we grew it was because Canadians were taking on more debt and buying more stuff and then paying that off in the future. And we just are up against a wall. We cannot borrow more money. And so the only way that we can grow to actually is that we have to deleverage first. So you got to
Exactly.
burn this
Bad
thing to the
debt.
ground. Yeah.
Yeah. Yeah.
And the way, how do we deleverage? Well, we sell our houses that we owe too much money on,
Yep.
right? We hire
Lose our
someone off
houses to the
Kijiji
bank.
to get our car stolen, whatever. Like that was a
Yeah.
joke, not financial advice, by the way, but like,
But
that's what people are doing,
send
dude.
us an
That's the
email
stuff
if
I'm hearing
Yeah,
about.
that's what you
Yeah.
need.
Yeah. You
People
got an
come
affiliate
here
link
for
that, right?
financial advice.
we know people in Montreal. Okay.
Yeah, so like but this is what people are doing now to try and deleverage, right? They're
Yeah.
selling their boats on Kijiji that they bought, selling off their Sea-Doos on Kijiji that they bought during the pandemic, and selling off their Airbnb
Rental
cottages that they're
property.
taking a
Yeah.
30% loss on and whatever. I
Yeah.
mean, until we're done that process, which is going to be a long, I think, and painful process, like I say probably 27, 28, there's no
Too.
growth.
Me too. Yeah. And you saw in the States when they had the Great Recession where they went, basically their debt to household income dropped in half.
Right.
And we just continued on that same
Yeah. Well,
path
that's when we
going to
started
where
our
we are.
credit addiction, right?
Yeah. Yeah. And
Were
I
that's
mean,
we
it's
exactly
funny.
as
what
were we
that's what
as
we're seeing
crazy
now.
as the States? Like, did we get as fucking nuts as
We
like
were always in line
strippers
with them until
owning
they
20
went through
houses?
their own situation. That's what we need. We need a major correction on our borrowing habits.
Are you a clairvoyant, TK? Do you know the end of my sentence before I say it? Is that what's happening? Do you guess the end of the sentence before you cut me off? Do you know the end of the sentence?
Are you done now?
Yes.
Okay.
Thank you.
Yes, I do.
Okay. I thought
And
so.
but those are the things that's exactly what Canada's going through. So obviously on my side, we're going to see things like, hey, I got these pre-construction condos. I got two guys right now pre-construction townhouses that they're closing on, and it's just
Yeah.
like get rid of them. What did you pay? I paid 750. We sold one for 675. This now guy comes to me today, he paid 980 or something like that. And I'm like, if you don't list them at 900, you're not going to sell. The other
Mhm.
guys are all listed for 980, but they're on the market for months. And so it's
Yeah.
the same thing. That debt is just bad debt. It's underwater. It's they can't sustain it monthly, all that stuff. So there's a huge amount of that, I believe, Dan, that'll get
I
reset
agree.
over the next couple of years.
Has to.
That's a chart that we
No other
should
way to do it.
watch. Are you a real estate agent and you're looking to make a change anywhere in Ontario? Guess what? We're hiring. Frankly and Associates, #1 team in the GTA for all Remax teams, #1 team for all teams from all companies for number of units sold throughout Toronto. So if you're looking to make a change, best decision I ever made was to join Frankly and Associates. Go to jointeamleo.com and we can set up a call.
Well, that was where you started with, is this cross section of rentals. So, like, what do you think, though? Really, do we have that much, or is that a Canada-wide thing? Like, Canada's got too much rental, or do
Well,
you
it's a
think?
market by market thing. Like Halifax has like I don't know 6 to 10% of their rental market under construction right now. It's going to have an impact on vacancy and rents. Toronto, we have this wave of condos, but then after that, everybody who's trying to build rental is dealing with what you guys were just talking about, right? Like you can't make them pencil really. So Toronto, we're not really super at risk of purpose-built rental overbuilding our rental market and putting downward pressure on rents. It's going to happen. We're seeing downward pressure on rents, but we're not seeing it at the scale that I could see it happening in Alberta, BC, Atlantic
BC sounds
Canada.
scary.
Yeah, BC is nuts.
So you're saying that
14.
this is a national issue, but you think Toronto is going to be the most insulated?
I don't think it'll be the most insulated. I think it'll be the most insulated to that phenomena, but it's not, it doesn't mean that it's not, we don't have our own problems. Like we have a different brand of problem, which is the same thing from this whole condo supply that is also going to go into the rental market. And basically all the people who aren't realizing losses in the way that you described by selling down 80K or whatever are those are people who have chosen to lose their money over time and take $1,000 negative carry on and rent it out at a loss for the next 5 years. And all of those condo units are basically, I mean, those operators are incentivized to get a tenant in as soon as possible to just stop the bleeding. To
Drive rents down
Yeah.
because they're going to have to just
Yeah.
take what they can
Yeah.
get. Richard Lau from ResCon was on last week or the week before.
He's
Last
great.
week.
And
He gets it.
Yeah.
Yeah, and so because he's on that side, I kind of, I always look at it from like being devil's advocate and stuff like that. Do you really think that we're going to have a shortage? Because you're talking about potential oversupply, but all the developers are now like, because we're not selling any pre-con, there's going to be a shortage in 5 years. We're not going to have any places for anybody to live. We're going to go back in that cycle again. Like that rhetoric, how do you read into
All
that?
depends on population growth. I mean, right now population's growth 0. If they bring it back to 1% by 27, yeah, we'll have a shortage. If they don't, then we likely won't. My expectation, what I'm modeling for is probably rents fall for the next year, and then they start going up because they're going to turn the tap back on with immigration, and probably they'll also not renew the foreign buyer ban in 2027 either, just very quietly, right? Everyone's calling for them to remove it. It's like that's political suicide, right? But they can just quietly
Not
not
do anything.
let it. Yeah. Oops.
Yeah.
Sorry, we forgot to recheck that box in 2027. And so that's when I expect. And then they'll also get rid of the stress test probably next year. OSFI's already studying that right now. And that study concludes in November of this year. So
They want
they're
to
running
stress the banks.
yeah, so they're stress testing the banks on loan to income across the
Yeah.
whole portfolio. So basically, banks can only lend to 4.5x income across the whole portfolio. And if that yields similar or better results than the stress test, then they'll get rid of the stress test.
That's
Yeah.
an
Certain
average
percentage.
across the board. Like some
Yeah, across
people
the
are
whole
at
portfolio.
12% and some are at 1 or whatever.
Exactly. Yeah.
Wow, that's
Yeah.
crazy. That's a different way
Mm.
of
So
doing
it
it.
allows them to open the doors for certain people and other people they can be a little bit more restrictive, right?
Yeah, exactly. There is also another cap on like the total percentage of their book that can be over 4.5% of.
4.5
Yeah.
exactly. Yeah. Yeah. Which
I
in
think
theory
it's,
makes sense,
yeah. Yeah,
right?
for sure. Like,
Yeah.
I mean, and really like that's who we should be regulating because they've realized that, the homeowners, like it's very similar to what happened with the variable rates, right? So this creates a bit of a perverse incentive in the market where, um, I guess in 21 when the bond market was calling that rates were going to rise, but the Bank of Canada still hadn't started, fixed rates were going up, and so because of the stress test, you could go qualify at the fixed rate, which was now above that 5% benchmark, or if you wanted to qualify at the 5% or 5.25 or whatever it was, you would go into the variable, and so everyone was piling
Right.
into the variable rate, not
Sure.
because it was a better move or they didn't feel risk or whatever, but simply because it gave them a marginally more buying power. And so
Yeah.
that is completely the opposite of what we want from the stress test, right?
Yes.
That was a little bit of a whoopsie. Then now we're seeing something similar where baby boomers are piling on debt at a faster rate than not baby boomers, 55 plus is piling on debt at a faster rate than anybody else in Canada. Why would they be doing that? Well, because they're all co-signing for their kids, right? Something like
Right.
over 40% of first-time home buyers had somebody other than them and their spouse on title. Who is that?
Yeah.
That's mom and dad. So
Gotta be.
bank of mom and dad's giving them money as down payment or maybe even a HELOC, and then they're also co-signing on the loan. This is another way that people circumvent the stress test by
Mhm.
increasing the income and adding another borrower to the loan. And that's creating more risk, not less risk, right?
Yeah.
Like because you're increasing now the credit file's exposure to mom and dad's house and mom and dad's credit,
Future, yeah,
You,
their
you, you
future.
people be surprised. The clients that I'm dealing with right now under the most pressure, the ones who I'm dealing with power of sales, the ones who've got this crazy amount of debt, private mortgages, most of them are over 55.
Yeah.
I believe it. Yeah.
They've been using their house as an ATM for
ATM.
years,
That's
and
the
now and
trap.
they bought it 20, 30 years ago.
Yeah.
And that they were the people who mismanaged the funds over the years, and now they are taking on as much as debt from wherever you can. On another note, another guy I was talking to today, he listens to the show, but I won't make it too obvious who I'm talking about. But he was letting me know about how he was able to secure a mortgage somewhere, without the proper documentation, obviously. But the issue was the appraisal. So he says, well, he found an appraiser who was willing to appraise it at the price he needed to as well, too.
Sure.
Double whammy on
Yeah.
both sides.
There you
Yeah.
go.
So, like
Well,
the
so
Canadian
whole debt,
dream.
the whole debt crisis, has still got a lot of issues. That's why anybody I'm dealing with right now, it's like get it to the market, get it sold. You're gonna be, I'm talking delayed gratification, Dan. Right now, you're gonna hate me. You're gonna think I did a horrible job and that you sold it for cheaper. In 3 months, you'll call me. You'll say, "Thank God, TK, I
Yeah.
took your advice. Thank you that I got it sold. My neighbors didn't sell. I sold for more than what the last guy sold for." And then that's when people will start to want to talk to me again. But that's the
well,
only way. And if you don't
Yeah.
have that feeling when you're selling, you might not sell because
Yeah.
that's just the
100%.
market right
so
now.
so what kind of deals right now actually make sense? Because there is people that are looking for deals and there is people that are looking for a return better than whatever their fucking GIC risk is at the moment, right? So what kind of thing? I know before you were looking at more kind of outskirts, multiplex, think like
Yeah.
8 to 10 cap kind of stuff like that. Is
Yeah.
that even a thing still? Is there demand for that product? Like, what are you looking at now that actually makes sense?
Yeah. I think those are still those still work. They exist. Like you can still buy like a 7 cap in Cornwall. Like that's like kind of like quite frankly, like people might call you a slumlord for owning this thing. Please try and fix it up, etc. But not just Cornwall, but like, suburban fringe GTA, Lindsay, Ontario, you can get like, 7 caps, right? Like Peterborough, even you're seeing like in the 6 cap range, like those cash flow, right? Your 6 cap is a cash flow at current rates. Not to say that you should buy it there or that, but like Peterborough wasn't massively insanely exposed to this international student thing like Conestoga or, Canadore College or whatever. So you didn't really see this huge like volatility in the rental or resale market. So like those work. I do really think that there's going to be meaningful impact from Toronto going to sixplex. I think that that's going to get a lot of stuff. Like, I mean, it improves your yield on cost by about 20%. So where CMHC premiums probably just killed like anything that was going 4+1 before. If you go to sixplex, it'd probably put them back on side. I'm of the opinion that like, and I think people really need to realize this. If you're buying or building a project with that barely pencils with CMHC MLI Select, it's a debt play, okay? And those deals only make sense if rents are going up and valuations are going up. We're currently not in a market where that's happening, so model your deals accordingly. But I do think that multiplex is a decent play, and I think that we're starting to see more and more. I don't know if you guys know Ben Singer or like Matt from Foremost. Both would be amazing guests on the show, but they're saying we're seeing more and more people actually doing these plexes as condo exits. So because it's cheaper to stratify those now. So build a sixplex and sell them off as condos. What's the guy?
Are they selling them? They were selling them before. They
Yeah,
were selling them when the market was good. They were selling them before.
yeah.
Not sure how
They're
this
more, I would
market
say they're
would play
more
out.
liquid than a condo, but less liquid than a detached or town. But like
Freehold. Yeah.
Evan Saskin, who from Blue Lion builds them like townhouses, right? He builds like
Yeah.
3 of them, and then condominiumizes them, and that's like you get a brand new condo town basically.
Stack townhouse, no?
Yeah, well, he builds them side by side, just with like a small area of each unit that overlaps, so it still fits the Plex code.
Yeah. I
And
haven't seen
I
those.
mean,
Yeah. I've
yeah,
only seen them that are similar to like a triplex, fourplex
yeah,
layouts.
he's got a really cool one coming up.
Yeah.
Can't remember where, but those seem to be doing well. But again, there's so few of them, so they can do well. If the market was flooded, they probably wouldn't. But honestly, like if I were to say like, and I think I've told like 3 people this idea. So this is where I actually think that this is like if I was going to do a deal, and this is something that I'm like actively trying to figure out, where are my partners for this kind of thing. If I look at the most underpriced real estate in any city in Canada, but especially in Toronto, it's your high street, ground floor retail, 2 residential units up top, right? 2 stories of residential up top, maybe 4 suites. Okay, so I had a property in the East End. I sold it. It's ground floor retail, 4 res units. It was like row house style. So there was another property on either side. Sold for like 1.6 mil. Okay, that was like a I don't know 6.5 cap. Very very similar structure. 3-story row house, 4 units, fourplex. Sold for like over 2 mil, simply because it was just residential, right? And it's all just credit. It just becomes a credit thing. So if I can go get the high street property simply because it has a retail at a discount, I get an extra unit for free, or I actually get it for negative $500,000 compared to the other property. And then what I do is I lob off the back half because of the way that the zoning structure. You literally just lob off the back half, make it a gym or a lobby or another unit, another res unit, and make it part of the residential of the building. Now all of a sudden you can qualify for CMHC standard, right? Or even MLI.
And zoning wise,
You can do it like the way that the majority of these are zoned is that
yeah.
the back
Your
half.
CR zoning won't you need some commercial space, right? So
Yeah, but so you wouldn't take the whole main floor. You would just take the
yeah.
back of it, right?
But you're saying that's gonna be used for amenity space for the
Amenity, gym, whatever for the
residential.
res, yeah, or another unit if you want it to be, right?
This is on a laneway. Is this the ideal scenario?
They
Or
could
just a
be
rear
lane
entrance,
loaded, yeah.
whatever. Yeah,
Yeah,
some
they
sort.
could be
Yeah.
lane loaded. A lot of them
Yeah.
are. I would say majority of that stuff is, but
Yeah.
to me, like that's a compelling play. That's probably the only like really, really cool play I can see in the market right now, which is
Yeah.
buy those things at a super deep discount simply because
No one's
nobody
buying
else can
those.
buy them. Yeah, well, nobody's buying them, and
Yeah.
they're priced like
With a
3-4
top up?
caps.
Was
It's
it
like they
top
make
up
no
part of
sense.
the idea?
you could top them up too. Like that's another easy way to get the residential GFA to hit, because if you get to, I think, is it 70% or 60, it has to be 66% or 70% to get hit CMHC standard. I can't remember the cutoff, but whatever it
don't know.
is, I think it's 70. So
I
that,
gave
because
up on
otherwise,
CMHC a while ago.
but if you move that over from a property where you're buying it with a commercial loan to a
Mhm.
property where you're buying it with CMHC, it
Yeah, big
goes from
difference.
huge.
Yeah. Yeah.
Like, so
That's the issue.
that's, I think the only deal I can see in the market that like, if we're talking about deals that really, really make sense, that aren't an MLI debt play, you know, insanely levered, 50-year AM spread out, whatever, like
I like
that's a cool
that.
deal.
I like that also, especially if it at some point is going to be part of an assembly,
Would be nice
especially,
too.
right? So
Yeah.
if you get a corner, it's ideal because at some point somebody's going to come knocking. If it's not you buying up the rest of the block as you go with even the same idea, maybe you get three pieces and you force yourself into the deal. But that would be, I've looked at stuff like that. There's a couple of things on Young Street, like between Wilson and Lawrence, where they've done kind of similar stuff like that. I don't know if the numbers work on Young Street. Like, what are we talking about? Like Mimico or Etobicoke or Scarborough?
Queen Street, Bloor Street.
Does that still work on Queen Street? Like the smallest little piece of shit, nothing is 2.4 million on Queen Street, no?
Nothing's
Yeah.
selling. Those mixed use buildings, nothing's selling. They might be priced
Mhm.
at those prices. But like for a building to transact right now, I got one on Lakeshore Road East in Mississauga. We're at 1725 and we're not getting that number based on the feedback.
What's the rent though? Like, do these things are they being sold as cash flow
They're
properties?
like 3, 4 caps right now. So everyone's
Yeah, they'd be
looking at
low
it like I'm gonna
fours,
go.
probably low fours.
They're like depending on the asking price. Yeah, they're gonna transact. You know what I mean? At best, low fours. But the investors right now are looking at it going, I want it at a 6 cap or something like that, and the sellers aren't willing to budge.
And you want these things empty so you can put a new retail tenant in and you can put new tenants in everywhere and renovate.
Yeah, I mean, I think that's part of it. You could do a cash for keys program the same way you could do anything you would typically do with a res, you could do, right? But I think the big play is like just switching to a credit product that makes the deal cash flow so you can hold it longer. Like you just can't cash flow these things when you're buying them with like what's the best debt you're going to get on that? Like probably owner occupied BDC financing that you move in on the main floor and you're still paying like 7%, right?
Yeah, yeah.
But if you flip that, if you get enough residential GFA that you flip that over to 4.5, 5% CMHC standard
Yeah.
on a longer AM, it becomes a compelling deal. Yeah, sure, you're still not buying it at a great cap, but I'd be happy if I'm buying at 25 or 50 basis points higher on my yield than a comparable res property up the street just because I have a retail on the ground floor.
Sure. Bottom
What
line is if CMHC is financing it, they've already done all the underwriting and that's a stable asset. And like we're young enough now to be having 25, 30-year plans on this type of real estate. It might not be something that a guy's going to want to do in his 60s, but if anybody who's in their 20s, 30s, 40s right now, this is the type of stuff that you should be looking at is getting yourself into a few good longer amortization loans on some multifamily and just buy and hold. That's it. Rents are going up eventually. There's no way that they're not going to.
For sure.
And that program is going to be around. It's probably only going to get better when you look at it. When you look at the way that CMHC operates, they're only going to continue to try to pull more strings for more properties to be built and refinanced and everything else.
I would say as long as the market doesn't destroy it, which they're trying really hard to. But I think like it's been interesting to see how CMHC is responding to that, right? Like now they have that 25% cash requirement or 10 to 20% cash requirement. So you have to have 20 up to 25% liquid against the project costs in order to qualify. Plus they have the rental
It
achievement
wasn't net
holdback.
worth. That's cash, like net worth, like
Yeah,
liquidable
exactly.
assets,
Liquid
right?
net worth. Yeah.
Yeah.
Um,
Sorry.
yeah, liquidatable. And then you have to then they have the rental achievement holdback. So basically, if you go buy some pre-con sixplex in Edmonton and you're a realtor who's selling it to you pro forma as the rents at 100K a year, and then when you go to stabilize, the rent vacancy is now 7% and your rents actually were 20% below, and now your projected NOI was 100K and now it's 80. Your loan just dropped by 20%, right? They just right size the loan according to the NOI. So like as a taxpayer, I like to see this stuff, right? They're de-risking the product because people are turning into a freaking casino.
Yeah. Which is what happened with MERBs and pretty much any other government
Everything, man,
program
everything.
with
It's just like,
anybody.
well, yeah, and it's just like like we're in the information age, right? So the flow of information, how quickly it is for people to destroy stuff in Canada is incredible, right? Like they
Yeah.
scorched earth the pre-con world, and then it's like,
CERB.
okay, let's go. Yeah,
But this is what
serve everything,
happens.
man. The SIBA loans, like whatever.
Yeah,
Yeah.
so this is what happens, and this is what I'm seeing right now. is a lot of people are just coming up with schemes now, like different schemes. And this is how it is. It's like all these things, people just give us the rules. Somebody's going to figure some shit out. And there's a lot, like I see people focusing on like dentistry or medical, like just to be different and not have competition. Or I see guys that are focused on like some weird affordable housing like schemes, like they know some guy, there's some loan that they can get or rebates or some kind of shit. Everybody's like looking for an angle. People are trying anything right now. I don't know if anybody's successful. I sat in a room with some guys that have been doing rental like way before anybody else was doing rental. And these guys are all just sitting there going like, there's no money in rental.
No, not
Right?
anymore.
Like there's no, well, they don't seem to think that there was very much the whole time. Okay.
It was
like,
always a tight game for sure.
very, very tight game. And like now it's even tighter. And so they seem to be wanting to do bigger projects than smaller projects right now, which is kind
Same
of
amount of work. Yeah.
Well, this is the thing. It's the opportunity cost. And that's why I was asking what you're looking at, because those small things, you know, in Cornwall, 5 or 6, or even the small ones in Toronto, sixplex or a little retail, like it's a lot of work. That's what I was thinking when you were saying that. It's a lot of work. And like for the same amount of work, you can do 400 units somewhere, right? Maybe not the exact same amount of work, but you know what I'm getting at. There's like, but then they're sitting there going, I can't get anything to pencil. But actually, now that I'm thinking about it, it's bigger fees on bigger projects. Guys are chasing fees like motherfuckers right now, and guys are scheming like motherfuckers right now. So, like, what's it going to turn into? That's the only place you
make money, man. As a GP, like really in a market like this, like you're making money on your fees. So that's why people are doing it. I don't GP, like professionally GP, so I don't take fees, right? Like when I'm talking about what I would be doing, it would be with how am I going to make a return on my own money? And in most of these projects, I'm an LP, or a lot of guys like want me to co-GP so they can put my name on the project to raise like a little bit more capital. But all of that to say, I wouldn't take on something of that scale. The main reason I wouldn't take on a project like that, I've had a lot of these guys call me and ask about how to fix their leasing programs. I do not want to be in a market where vacancy rates are climbing, and I underwrote at 14 underwrote the project at $1,400 total creation costs to make it pencil, and these guys are giving away a half a year's rent now to make hit their pro forma rents, and they're also against a clock. They have 2 years to stabilize that building at those rents. So that's, because after 2 years, then they can't get that CMHC takeout. So their backs are really against the wall. I would not want to be leasing 400 units in this rental environment with declining rents and the inability to meet the clearing price, because I cannot reach, you could go and blow that building out if you drop rents by 20%, but they can't do that because then
they don't hit the target.
Takeout is, and then their takeout's toast, and then they can't pay out their capital stack. So, man, it's a mess. That's why for me in a market like this, it's 6 at a time or just nothing. Honestly, I'd just be sitting on cash and just work. Like for me, probably the best thing that I can do right now is just work and accumulate more capital, you know?
Sure. That probably makes the most sense.
Which in this environment is conducive for that, right? Because like people need help right now from somebody like you. They need help from professionals. They need a lot of hand holding, and that, they've gone to their cousin or their friend or whoever, and that guy doesn't know how to help them, right? Or gives them bad advice. And so they want to be able to figure out what they need to do. And especially on the development side right now too. Like I know everybody wanted to be a developer over the last 5 years, and that there's a whole bunch of guys who just don't know how to navigate.
They don't want to anymore.
There's
a whole bunch of guys don't want to be.
They don't want to navigate this market.
Oh my God! There's some guys waking up in sweats at 3 a.m, just freaking out right now every day. I can't even imagine. I'm so lucky that I don't have something like that right now. I so easily could. If that motherfucker didn't fuck me out of that deal at King and Dufferin, I'd be stuck in this mess with everybody right now in that high rise, low end, like figuring it out kind of product. Fuck, thank God that guy fucked.
Adding stories, bringing in more investors.
Didn't we bring you
that equity guy?
Which equity guy?
Is that your Parkdale deal? I'm not going to say his name on the show.
Yeah, it was the Parkdale deal.
Yeah.
Yeah, did you see our little interaction on LinkedIn the other day?
No, I didn't. I'm
Oh,
gonna have to go check
you're
that
gonna have
out.
to go check it out. I'm bringing the Twitter vibes to
X
LinkedIn.
vibe.
TK
Yeah.
says
I think
Oh,
LinkedIn is definitely becoming like
it's
Twitter lately.
ripe,
Like
bro.
it's
oh
It's
my
getting
God.
ripe.
crazy out there now,
Oh
man.
my
Like
I'm
the
God.
getting attacked.
corporate world is
Whatever happened to
going.
resumes? Jeez.
Yeah, Ron's been doing it too. Like people are
Yeah,
just lighting each other up on LinkedIn. I guess the corporate social media is
it's
getting
getting
fancy.
raunchy. Yeah, it's
Needs to be
getting
a
good. I like
filter.
it. I like it. Well, listen, it's been. I guess I could talk to Dan all day. This is Mr. Real Estate. You want to give a shameful plug on some of the stuff that you're?
Shameless plug here. You
I
got
don't
lots
really
of
have
stuff. You
I don't
closed
really
the
have
stock
anything to
market the
plug.
other day.
Yeah,
What
I
I
did.
happened?
saw
Yeah,
that. I saw that.
Explain that. Give us the sort of
Yeah.
inside
well,
scoop here.
Why you?
yeah. Well, I don't know. I really, so
What a
What do you have to
question
do
to
with
ask.
stocks, bro?
oh, the
Canadian investors show me.
yeah. So we're on the Canadian Investor Podcast Network, and they got invited by BMO ETFs, which is a sponsor on our show. And
Cool.
yeah, so we got to tag along as the real estate guys, which was nice. It was nice of them to bring us to take
Wow.
the
Beauty.
children that they usually hide. They
Right.
brought us out to one of their stock events. No, they've been awesome to us. I mean, the network. If we without them, we would never have been able to get to where we were from a real estate show perspective. And it was cool, man. It was a really cool experience to just go and do that, hit the button, Closed
Yeah,
it. It went
it's
red,
awesome.
unfortunately. We closed her down red. Sorry
Yeah,
for anyone
Yeah,
took
that's
your
okay.
money away, but yeah, I don't know, something I've always wanted to do, so that was fun.
that's
Yeah,
crazy.
that's a big deal. Yeah,
Wow.
and the show's going well, and you
Yeah, it's
guys.
good. It's I mean, I'm sure you guys see it, like it's very temperamental, right? Like it's the asset class is not something that like people, if you're not talking about doom, like people aren't really tuning in. Like most people want to come and hear about the bad news. There's not like, early on when we started the show, it was like people were bullish. They wanted to hear how to invest in real estate and
Yeah.
whatever. And now that's just completely gone away. And you can even see it. Like if the stock market just rips for like a couple of weeks, like people just aren't listening to our show. They're like, screw real estate. Who cares? I'm gonna go make money, going levered long on fart coin or whatever. Right.
Yeah.
So
Yeah,
Yeah. If
yeah,
you look
but
at the stats to our show, like views definitely correlate with sentiment, like
yeah,
100 million%.
yeah, same. So that's been cool to observe for sure.
It's
yeah, but it's a
crazy.
long-term thing. My thing is I like doing it. So the
Yeah.
day that I stop liking, recording
Yeah.
a podcast once a week, I'll stop doing it then.
That's a Drake song, isn't it? Like, as soon as I'm done having fun with it, I'll be done with it, or something like that. I don't know.
There you go.
It's a
There you go.
Drake
He got
line
that
for
from
It
me.
it's a
should
Drake
be.
line for everything.
It
He got that
should
from
be.
me.
Well,
But
what about
that's what it
Valerie?
is. That's the only thing that matters. Don't worry about the views and who's listening and all that kind of stuff.
Yeah, for sure.
Do it because you enjoy it.
Yeah. Valerie's a real estate brokerage, Daryl. We talked about this.
I know,
I
but
pitched you on it a while ago and you didn't
I
know if
did.
it was real or not. Dude, and that was when AI was like, that was a year ago. Like ChatGPT could like, plagiarize something for you. Now it can take over your computer. It can book showings for you, follow
Yeah,
up
it's
with your
crazy.
leads.
Yeah.
Like, so that's what we're doing, man. We've positioned ourselves basically as like an AI admin assistant for agents, and it's going well, honestly. A
Cool.
lot of agents need that little bit of a competitive advantage. Most agents have this problem. Like if they want to get to the next level of their business, whether it's,
Mm.
100 to 200K, 200 to 500, whatever, they need to offload a bunch of admin tasks. And most agents can't ever do that because the financial risk of hiring an admin is not something that they can fit into their business. So we can do about 60, 70, I would say probably within like the next 6 months, I would say 70% of admin tasks that if I were to interview you and say, if you're going to hire an admin, what do you want them to do?
Mhm.
Editing videos, they do that, right? Like, and that's full YouTube. We use like a Descript AI editor to edit videos, cut them into shorts. You can get like a week's worth of content done in an hour.
Through Valerie? This has to do with Valerie? We're still
Yeah, we
talking
have a
about that?
studio. Yeah, that's what man, agents want social media. All the real estate
Is that just
brokerages
for
have
you,
freaking
under the
You
podcasts now.
started,
brokerage,
so
or is
you
this like
started
a
producing other
add-on?
people.
No, that's
Cool.
within our brokerage. We have a studio. You literally go there, you hit a record button on the computer, you talk for 10 minutes, gets cut into a good video and gets cut into like 15 different shorts for the week.
Oh, wow. Okay. So hold on. And so most of the AI stuff that's beneficial is beneficial to the agents in the background. You've
Mhm.
created tools or a suite of tools for the agents in the background. So
At
it's
the
not
brokerage.
necessarily
Yeah.
a front end facing AI helper for the.
We shouldn't have that. Like we do have
Ah.
a consumer facing product. If you go to valerie.ca, you can like ask it questions about the market and about listings but the boards have very much kneecapped what you're capable of doing. Like you can really only use AI as a search assistant. You can't take any of the stuff. So all it can do now is really select what it's showing you, not really like take any data from a listing. So I mean, we have a consumer facing tool. I think it's a good lead magnet. It's sort of like House Sigma, but it's got, ChatGPT strapped to it basically. It'll get a lot cooler. I think it'll end up more like basically pure ChatGPT, and I think it'll really transform the way that people search for properties. So there's that, but a lot of people like, it's so funny, eh? Like realtors, the first thing they do when they're presented with AI is like, how do I eliminate phone call? How do I eliminate the one job that I should actually be doing,
The
which
most
is cold
important
calling?
thing.
Honestly,
yeah. I don't want to
So-
talk to these people. Just
yeah.
buy
sometimes-
houses from
yeah.
me when they're ready. Come on.
So I fill out like a realtor's lead form, and now I'm getting called by robots all day, right? And it's like, come on, guys, like really, like AI
Those are
voice is the
horrible.
worst application of AI. The worst.
Yeah.
It's we started with AI voice like over a year ago. You know what we use it for now? We wanted to have a headless browser go into Broker Bay and book showings for you as a realtor, but you can't do that. So every brokerage needs to have a call center that can have showings booked for all the vintage agents from the 70s who still book their showings on the phone, right? So what does AI voice do is you say into your phone, hey, book me showings for these 5 properties. It maps them out for you. It sends you a Google map, creates calendar invites saying status update, scheduled this one, sends those calendar invites to your clients, calls the brokerage using AI voice and books the showings.
Cool. It's amazing.
because you can't have it with Broker Bay yet. Like you can't have that as like a.
They don't have an API, and a headless browser technically is in violation of your license.
The board's
agreement
got to
as a
issue
member
that.
of it. Yeah,
Okay.
so
And so things
we
like
like to be compliant.
Yeah.
Yeah,
Okay,
you got
cool.
it.
Yeah, that sounds
Cool.
great. Yeah, first
That's
work it
crazy.
out with your agents, and then like your buddy, the Habistat guy.
Yeah.
He's on
Oh, yeah,
Trev
what
now
happened
with
with that?
fantastic
Yeah,
software.
you
Right?
using it? Yeah.
Yeah, like when I need it, I go to
He
that.
got
Absolutely. It's
incorporated
amazing.
into Treb. That's what came of that whole thing.
Yeah, so we got a license.
What?
Yeah, we have a 10-year license with Treb, or 5-year global license with Treb, and they've rolled it out to all of the. It's not with Treb, it's with PropTX, but they've rolled it out to a handful of different PropTX boards. I think there's like
No
100,000
way.
plus. Like there's Ottawa on there, a bunch of other large boards. So yeah, I mean, it's pretty cool, man, and yeah, that's been amazing, and that was definitely a bit of a. I mean, a crazy ending for those
Wow.
who know the
Yeah,
story. of
like, it
what
was just
happened.
like-
I mean, it's a crazy ending.
I didn't
for
think it
sure.
would end like that. That's
Me
the
either, man.
opposite ending.
Outcasts and,
Oh.
and like how dare you challenge the board to, hey, wait a second, this is pretty cool stuff,
We
right?
could use
I love
this.
Yeah.
So
Yeah.
they-
So
oh,
that
it's a
saves realtors a ton
license.
of time when you actually want to have that type of data for your client. You don't have to do
Yeah.
it manually anymore.
Not a
Yeah.
purchase though, a licensing deal.
Yeah, no, for sure. I know there was an interest in them buying it, but I think that licensing just ended up making sense for everybody. So that's
But that
what we had.
licensing deal, you could probably sell that thing for a decent buck too.
Yeah, I mean, you might be able to sell the company now, like that has the biggest board in the world as
Yeah.
its primary
Yeah.
customer.
Well,
Might
look
be a
look
good
at
thing to look
Broker
into.
Bay. Broker Bay, they were bought by Supra,
yeah,
right? So that was something that's a pretty big deal for them to
Yeah.
start with Toronto,
100%.
work out the kinks, and then now obviously be able to go all over the place. So
Cool.
Yeah, and they've been great to work with, honestly. Like other than the couple of hiccups at the beginning, which like I don't fault them for everything that happened with the Habistat. Like we weren't using the licensing agreement for realtors properly, like the
Right.
data.
Yeah.
So they did what was within their ability to do, and that it ended pretty nicely, right? So like I'm a partner in that business, so it's nice. Yeah, it's nice that things worked out with positively rather than they could have ended pretty catastrophically for me because I was the one whose data feed it was using, right? So.
Right.
that's okay.
I
You'd
still have my
figure
real
something
estate
out. If you
license,
lost your
yeah.
license, you'd figure something out. Don't worry.
Yeah.
Oh yeah, for sure.
Yeah.
Oh wow.
Cool.
Well, thanks for coming back again. Always a pleasure.
My pleasure. Thank you guys for doing the good work and spreading the good word.
Yeah, you're always welcome. We'll get you back on the show again in the
100%.
future. And if you guys aren't following Dan, check him out. He's everywhere. We'll put all his stuff in the comments.
For sure.
And if you
Shout out
haven't
to
liked,
that.
commented, and subscribed on this video yet, then now's your chance.
Smash that like button, baby.
Baby.
This shit is taking 5 years.